All right, what is up, everybody? It's Nick Harrington, joined with Ty Ash here, bringing you our next segment here on our investor series, walking through the whole start to finish of how to invest in real estate. Episode 1, we talked about why invest and why it's important to have a why you want to invest. Episode 2, we talked through the next steps, going through how to run numbers, how to define a strategy, and how to find your team. Today, we're walking through, you've gotten step 1 and 2 accomplished. It's now time to actually start going to see properties, putting all these steps in place to potentially go and write an offer. So specifically, we're going to talk through how you can find deals, going on showings and when to go on showings and what to look for. And we'll talk a little bit about the offer process as well. Ideally, you walk away from this with just a better idea of you got all this education done. It's now time to go take action and maybe get one under contract. So that's kind of what we're talking about here today.
And make it as seamless as possible, because you're going to be wanting to make sure that you're partnering really well with your agent team and not just totally running them ragged.
Yeah, like help. Ideally, from this, you'll be able to help the team that you're working with help you, and vice versa. Because the more equipped and knowledge that you have, the easier it's going to be for yourself. The easier it's going to be for everyone and every part of your team that you're working with. So let's just start, Ty, about where to find deals. And I think that's like the key to any offer, the key to any investment is the deal. We say the word deal probably 100 times a day. And like, in my opinion, I always think the deal is made when you buy it, not when you sell.
Yep.
And so like, talk to me about the different ways that people can find deals.
I think the two buckets you have is on market and off market. So obviously the most traditional way that people find opportunities, let's call them, as opposed to deals, because there's a lot of opportunities. Not all of them are deals. MLS, so the multiple listing service, which pretty much every agent's going to have the access to get you set up on. That's going to be your traditional on market deal, as opposed to our second bucket, which is off market. That can be from local wholesalers. It can be from maybe just relationships that you have in the market, from just knowing, literally just person to person, the seller. It could be from you doing your own direct marketing, whether that's phone calls, texting, mailing, making sure that your compliance is all good on those different vehicles and how you're marketing. But those are like our two ways that you can source deals. I think you'll go into this a little bit more, but like, what are the pros and cons versus like on market versus off?
Yeah. And so when I think about like on market versus off market, to me, the easiest distinction is something that's on market has a for sale sign in the ground with a real estate agent's name on that sign.
Yep.
They are like, this is for sale. Everyone come and take a look at it. On market. Off market, you got to know someone. It's got to come from a contact. They don't have it listed for sale, but they're selling it.
Mm-hmm.
Let's start with just on market, some of the
Yep.
pros and cons of it. And let's start with like some of the good things about an on market property. On market, it's going to be a little bit of a cleaner transaction, typically, is what I've seen. You're working with a real estate agent from both sides. You're using a standard offer to purchase template and document. You're hopefully working with an agent that's done a lot of these before, and a seller's agent that's done a lot of this before too. So I'd say it's like a cleaner, easier first option if you could find something on market. Less parties typically involved versus off market. You probably know more information about the property if it's listed for sale. You've got photos. You've got a good idea of the condition. Yeah, like what else would you say is like a pro for on market too?
I feel like there's probably more inventory available on market as well. So like, it's readily available information. It's very easy to set up showings, so flexibility in your schedule and getting out there, as opposed to off market. It might be you have 1-2 hour window, if that, to get into and do your due diligence, and that's it. So you have to be ready and rearing to go and have all your ducks in a row before you even have the opportunity presented to you. It's not like a chicken or the egg. It's you have to be ready to jump, or you're not going to be getting that deal.
And like I would say with on market too, I had something I just spaced on it. There's lots of deals. Like there's lots of opportunities for on market. They're very easy to find. You can go on Zillow.com and see what's listed for sale for on market. So it's a very low barrier to entry. If you're just like, I want to start running numbers, you can go on Zillow and you could see on market listings for sale today. So it's a lot less legwork, I would say too. And it's going to be like, when you think of a standard transaction, it's going to follow with an on market listing. talk about maybe like some of the cons and like downsides of looking at on market listings or like trying to get an on market listing under contract.
I think with lower risk of a traditional transaction, most likely being able to do some due diligence, within the property, even when you're in competition, with lower risk of more information and more due diligence usually comes lower reward in the terms of return on investment. Again, everybody can look at this. You're going to have more competition. I would say that might be a negative of the off-market deal. So it's if you're going to have more eyeballs on it and have more information and have more of that security, with more security comes usually lower returns.
Yeah, I'm with you. And like depends on the location of where the property is, depends on what they price that property at. You have a wider pool of people that are getting eyeballs on that listing and people potentially writing offers on that listing because it is on market. So something on market inherently is just going to have more competition than something off market. That doesn't mean that you need to go above and beyond for every offer, but there's going to be more eyeballs on an on market property than an off market property.
For sure. How about the pros of off market?
So if we talk about off market, to me, the pros of an off market, well, let's start with like how can you find off market properties?
Yeah.
And to me, the number one way is going to be through a wholesaler. What a wholesaler does is they're basically knocking on doors, they're sending out mailers. You probably even received phone calls from them if you own a house or even renting from a home and they got your phone number somehow. They're basically saying, hey, we want to buy your house in cash right now. And it's going to be a low price. They're going to sell it or buy it from you, but they then get that property under contract and they sell that contract to the end buyer.
Yep.
Pros of off market, typically you can buy it at a discount. Typically these are sold below what they would sell for if they're just listed for sale. That's going to be the biggest pro, is going to be the discount that you could buy them at.
I think the other pro is there might be less competition because instead of this listing being posted across every single spot on the internet, whether the MLS or Zillow or Realtor.com or Redfin, it's pretty much restricted to who does that wholesaler know and who's on their mailer list, and also the people that are readily available to present either cash, hard money. And in very rare circumstances, does a deal keep on the wholesaler's list with a potential to actually get like a debt service coverage loan or a conventional loan. You're mostly going to be competing with more sophisticated investors that have better access to capital.
Yeah, I'm with you. And that's kind of like one of the downfalls I would say of working with wholesalers is they're a bit more strict about what kind of offer they're going to accept, because you mentioned this like risk reward situation. There's higher risk and higher reward with off market because first off, you're buying it typically at a discount, but most of the times they're limiting that to just cash buyers or cash equivalent through hard money. And most of the times you don't get the chance to have a true inspection either. You're basically, it's an offer with no contingencies. You've got to move forward with it. And so that's the big
Usually
risk.
non-refundable earnest money. So that risk is there that you could, you're submitting earnest money saying that you're going to perform on the contract that you're signing. And that 30 minutes to an hour that you're in the property, you're doing full due diligence. If you're leveraging a real estate agent, we are not licensed inspectors. Though we do a lot of deals, we are not there for enough time, and we're limited by the when we go, what the weather is, and what areas might even be available to inspect. And that's like the risk reward that you get, which is usually factored into the price that you can purchase it for.
Yeah. Good. So I think that's a good summary, like on market, off market, pros, cons. I think it depends too on the strategy that you're looking for. We talked about that in the last episode where it's very important to like choose what kind of strategy, if it's a flip, if it's a buy and hold or a house hack. In my experience here in Milwaukee specifically, there's enough listings on markets for buy and holds that are good deals with a decent return where it might not make sense for you to go through wholesalers. If you're looking to flip properties, though, there's almost nothing listed for sale that has a good return from a flip perspective. And so that's when it might make sense to go to wholesalers and like get more boots on the ground or start like networking with local investors in your area. Surprisingly, one of the best ways that I've seen off market deals here in Milwaukee is a Facebook group called Milwaukee Off Market. And like, who would thought that this day and age, Facebook is out here doing slinging deals and off markets going on there. And you can see the comments of people like, I want this, DM me. So a lot of it, if you're going to be off market, it's going to depend on your strategy too. It's a viable option. I've done like a handful of off-market deals this year. It's got to be the right buyer. It's got to be the right seller. Some off-market, you could still even have an inspection, so it's not all the time.
Yeah.
But it's one more like avenue to get some deal flow coming your way.
I think the on market versus off market comes down to you're trading off time for money. If you want to be finding the off market deals and getting the margins that the wholesalers are getting, you're going to have to invest your time and money into actually finding those sellers yourself. Otherwise, you're paying that premium to the wholesaler for having done that work for you. And if you want the deal that is a wholesale deal that's probably better than an on-market deal, again, you're trading off somebody doing that work for you. But if you don't have the time, but you have the money to essentially go out and search the MLS and run your numbers, like you will get a lower return because you have not spent either enough time or money to actually create that value that somebody else is providing for you, which might be a real estate agent, a wholesaler, or somebody that you just know. So that's the biggest thing to know is, unfortunately, you can't just turnkey it and be super passive and get the very best deal in the market. There's a trade-off that you're going to get.
Yeah, that's a good way to wrap it up.
Yeah.
So let's now we talk about deals. Let's say you've got some deals coming your way, some opportunities, as you put it. You're running your numbers, as we talked about in the last video. Talk about to me when it makes sense to now actually go and see a property. And like, let's just start there. Like we're at the point where we're ready to like start walking through homes.
I think this is assuming you've done your education and you generally know how to run your numbers and you've partnered with your agent on how to get the inputs you need, most commonly being what are the rental estimates, taxes, insurance, can we think is realistic? Like you need to make sure you have the resource to get that information. And there has to be something other than just the opportunity looking good in terms of the pictures that makes you, kind of prompt them and be like, hey, this looks like an opportunity to deal that I should ping, my agent's about to go look into further. So like you've probably done some sort of napkin math or quick analysis knowing, I think the rents are probably this in this area. My purchase price is this. That should correlate with it being a good deal, at least on paper. So I've now reached out to my agent. I think that's really the first step.
Yeah, I'm with you. I think it's important. Like I always think of the showing. It's obviously to see the property. The point of the showing is to go and see the property in person, whether you're in state to go and see it in person or out of state, have your agent go and give you the ability to see it somehow with them. It's to view the condition of the property and to see, in my opinion, if the numbers that you've put together, the assumptions that you've made, if those are correct or if not correct. Because if the assumptions that you've made are correct in terms of rents, condition, repairs that it needs up front, and the numbers work, that showing is there to determine my numbers are right, probably makes sense for me to submit an offer. Not saying that that's going to happen all the time. Eventually, most investors can get to the point where they can just see a property, know it's a duplex, see the photos, see the price and location, and just know, I know rents are this here, this is underpriced, go and see it.
Yeah.
But yeah, the showing is that confirmation of, are my numbers correct or not? And also, I think too, it takes a while to get to that point. Like if you've never seen a duplex before and you're a brand new investor, I also think that showings are part of that education phase too as well.
For sure.
Where I don't want to make this sound like if the numbers are good and you go in a showing and you don't write an offer that you're not a good investor, because that's not true. It's going to take repetitions and showings to help you feel confident and educated. So maybe early in that phase, the showing is part education, part information of your numbers. But later on, once it's like that fourth, fifth showing, once you really get the feel of condition, properties, price points, it's more that confirmation of, like numbers look good. I like it when I walk through it. It's time to maybe pull the trigger on an offer.
Yeah, balancing what you've put on paper with what you're now seeing in person or through video if you're an out-of-state buyer. And I think it's a time for your agent and for you to make sure there's no weirdness factors. I think I saw a listing recently that was a converted single family with a basement unit. Like understanding that there might be some factors that like you just didn't even notice from photos because they didn't even, show it's not a upper lower duplex, it's a single family with a basement unit, or are the bedrooms 5 foot by 7 foot and you're not going to be able to get to the highest percentile of rents for that property. Those are the things that you just see, like my numbers work, going to showing, see it, and you're like, there's no way somebody would pay $1,500 for this bedroom. Like there's no closet, it's tiny. And those are some of the education pieces that you get that sometimes you'll get accelerated by having a good agent that's investor friendly, has done this before.
Yeah, I love it. So you decide it makes sense to go on a showing. You've ran numbers. Maybe you're just like, hey, I'm brand new. I just need to start getting into some duplexes or some investment properties, whatever that is. While you're at that showing, what are you looking for as a potential buyer?
Mhm. I think the biggest thing is confirming condition, which you already mentioned, which I'd say our checklist kind of goes down to this. I think it's 5 to 6 core items that are going to be high ticket items that could pretty quickly rule out something from being a deal just based on the showing and not needing to proceed with an offer. And starting from the top of the house down to the bottom, I think it goes, what's the condition of the roof, the siding, the foundation, your mechanicals, meaning your AC, your furnace, your water heater, and then finally your electrical and plumbing. Do you have fuses versus do you have breakers? Was it done in a professional manner? Do we have copper plumbing that's been updated, or has it never been touched since the construction of the home? And that could be an underlying expense in the future. Those are your capital expenditure items that could really make or break a deal, as opposed to worrying about maybe the cosmetic pieces of the unit that maybe a more traditional buyer might be concerned about. Of, do I want to live in this space? That's important because we want to have good housing for our tenants, but that's the checklist of like the major components that we want to get our eyes on when at the property. What do you
Yeah.
have to add?
No, I think that's like probably the most important thing. First off, I hate the term like, are the bones good? Because I just feel like that's so overused on like HGTV and everything. But like the core five that you mentioned are kind of like the bones of a property, where if
Mhm.
the roof, foundation, siding, mechanicals, electrical, plumbing all check out, most of your capital expenditures are going to be reduced.
Mhm.
But whenever I go on a showing with a buyer or for something I'm looking at myself, I'm creating like a running tally in my head of what is my total repair cost going to be for this property, whether that does include a roof or whether it needs updated electrical, or maybe I know it needs 2 bathrooms to be remodeled to get higher rents. That's kind of what I'm doing. And sometimes photos do a good job of that. Sometimes they don't. And
No.
so I'm walking through there. I'm looking at, as an investor, what money do I need to put into this property to get it into a good cash flow position, or what deferred maintenance has not been touched on this that I just need to get this done right away to kind of stabilize the property. That's
Yep.
probably number one. So I would put on like my investor hat, think about it as an
Mhm.
investor. Number two, I think about it from a tenant's perspective. If I'm a renter and I'm walking through here, what am I liking? What am I not liking? I'm probably less concerned about a foundation bulge as a tenant. Like, you spend 20K in a foundation, guess what? Your rents aren't going up.
Yeah.
What they care about are going to be, how does the kitchen, bathroom, floor plan, bedroom look? So that's kind of like step two. I'm thinking, what's the rentability of this unit? And also, like, again, what updates do I want to do to it to get a higher, to like lower my vacancy rates, or to lower my downtime between tenants, or to just get better rents as well. So I'm creating like a budget of short-term fixes and long-term repairs that I'm using to now update my calculations with.
Yeah. I think that's perfect, because obviously all of these things combined are going to get your total money invested to the deal and directly impacts the financials of whether it's, cash on cash, or at some point your return on the equity in the building. All of those things are super important as you look at making a decision to write an offer on that property.
Yeah, love it, man. Anything else about the showing that you'd say?
I think the last thing I would say, kind of like bridging into like the next subject here, is once you've gone on the showing or you've viewed the video that has been recorded for you, if you're a remote buyer, is you do need to make the decision relatively quickly about, are you going to write an offer or not? And like, I always like using rating out of 10, which is like, this is how it worked relative to my numbers, as well as just like the general condition and how it will fit into my strategy. That's going to really help your agent, because we have a pretty big checklist that we can go through of like all of the due diligence we do to make sure that you stand out from the competition on your offer and honing in that offer. So I think it's very quick that you have looked at enough numbers and seen a couple properties and showings to know a deal when you have one in your hands and actually take action. Because unfortunately, if you hem and haw over it, it will be gone.
Yeah, I agree with you completely. It's August 24th right now. And what we're seeing in the market is that anything that's an investment property, that's in a sought after location, that's priced well, you don't have a lot of time to think about if you want to write an offer or not. It's kind of, you've got a half hour, 45-minute, hour showing to do everything we just talked about. You have an agent to lean on to help you with this. And then you're pretty much making a decision that day. Hopefully you have like a couple hours. Worst
Yeah.
case, it's like, hey, we're reviewing at 6 and it's 5 p.m. Like that sucks. But
Yeah.
that's
That's
kind of
not ideal.
the market right now. And so being prepared for that, I think, is number one.
Yep.
And that comes with going on showings, having the education phase so you can move confidently and quickly.
So
But
to bridge into that, what are the key leverage points in an offer to purchase that you need to, as you're walking through the showing? Again, you have your mental tally of what work it's going to take. What are the actual inputs at the highest level that we need to know to start moving forward and at least start drafting the offer, knowing there can be some minor tweaks?
definitely. So I also think too that every property is going to be different. Location, days on market. There's no golden arrow of we're always writing over asking, we're always writing under asking. There's a lot of nuances to it. And it's very important that you work with an agent that understands those nuances of if it's been on the market for 15 days, what's that offer look like? If it's in this neighborhood versus this neighborhood, what does that offer look like? So let me just preface it with that.
Yep.
The main like levers, that you have to pull. This is me pulling levers. Price, obviously, price number one, probably the most important thing.
Yep.
Is going to be the offer price, and so under market price, under asking, over asking, at asking, kind of your three options there. Maybe even before that, it's going to be how are you financing this property? Are you using a cash offer? Are you using a conventional mortgage? Are you using an FHA loan? Because all of those are going to have different strengths in the offer. A cash offer is going to be stronger than an FHA mortgage. And
Yep.
so based on that, we're going to have to probably maybe raise the purchase price with an FHA mortgage versus maybe go asking with a cash offer.
Yep.
So type of financing, price. You want to add to this and keep this list going here?
Yeah, I think really the next, like you said, so it's how much money you're going to give them and how certain your financing is going to play a factor. And I think next on the list absolutely has to be what you do around inspection. Today in our market, there's definitely a misunderstanding that it's either you have a home inspection or you don't, that it's ditch to ditch. And I think what we see more often than not is that we can get offers accepted with a not to request amount on inspection. And the way that reads in the contract, just to be very quick, is buyer not to request any defects cumulatively under a certain dollar amount, which essentially is just lessening your ability to negotiate maybe one or two, issues. But if we find something a little bit more major during the course of your home inspection, we are going to be able to still negotiate price, closing costs, credits, potentially repairs, depending on what we can do to work with the seller. I think that's going to be your next leverage point. And if we kind of look at those three tied together, it's your price, it's your financing, it's your inspection. There are dollar amounts in the seller's mind of what those mean. If you go in with a cash offer, you're able to remove an appraisal contingency and a financing contingency, which gives more certainty. And potentially there's a dollar amount associated with knowing you're going to get to the closing table. Same thing with inspection. If you're going to have to negotiate and they know the condition of their property for 5, 10, 15,000 repairs, not having an inspection could have a dollar amount associated with what purchase price you have to offer. And it's a give and a take, and every seller's goals will be different. So I think those are some of the key levers. What other ones, or maybe just like go through a quick laundry list of where else we have to consider, unless there's anything like super important you want to call out?
I think you summarized it very well. I really do. That basically we're in a market right now where we need to make offers more competitive or not for the right listing. And
Yep.
so things like softening the inspection contingency, it still protects the buyer from those big ticket items, but it makes the offer more appealing to the seller. Also, it's one of those things too, where the more competitive the offer you can put together, typically the quicker the response you can get from the seller too, to kind of beat out other offers. And be more aggressive on that timeline for them to accept or decline. So all different things to consider. I would say one thing I'm going to say though too is when you are doing that walkthrough, anything that you can see that's visible that's wrong with the property, it's assumed you're aware of those defects. If you go to a home and there's a tarp on the roof and it's very clear that you need a new roof, when you write that offer, and if you have an inspection done and the inspector says, hey, you need a new roof, that's not news. And so one thing to consider too is that the inspection isn't a save all period for everything. Because what a good listing agent will say is you knew that roof was junk when you saw the
You
property.
know the furnace is 40 years old. You can see that it's rusted like crazy. Like, did they not look in the basement at all? Yeah.
Right. And so like use that showing to also make sure that the offer that you're writing at is the price that you want it given the condition that it's in now. Because I think that's something that's very important too, is that the inspection contingency isn't like a save all item for things that you know are wrong with the property.
Yep. Things that are blatantly obvious for sure.
Yep.
I think, obviously other things that matters, and I think we'll kind of dive into this of like, how do you actually make sure the offer that you're writing as the buyer actually matches with the seller's goals. And I think like there's not, like you said, the golden arrow, like the offer that wins every time, because sometimes sellers have one of two goals, and sometimes it's a mix of the two of I want to maximize my net proceeds at the end of the transaction, meaning they're prioritizing price, or I want to maximize my certainty. Maybe this is being sold as a part of probate or somebody passing away, and they don't want to have to worry about inspection, appraisal, financing contingencies that could make it go back on the market because something falls apart. You're going to always have that where they might be giving up price in order to get more certainty. And the way that we actually hone that in as agents is by picking up the phone and talking to the agent, which unfortunately I see is a very small percentage of agents actually make the call and build rapport, something that you do really well. Tell me like some of the things that you do in terms of like information gathering to hone in the rest of the offer.
Yeah, and one thing that's kind of a misconception with this too is, I don't know if this is all states, but state of Wisconsin, the agent can't disclose what the price is of the other offers.
Mhm.
Um, what they can tell us
Or the
is,
terms.
or the terms.
Yeah.
What they can tell us is the number of offers they received. And I think legally they can also disclose if those offers have contingencies or not. Most of the times, agents do not disclose that though.
Yeah.
So whenever we have a buyer that we're working with, you and I both do this. We understand that they want to submit an offer. We call the agent and we ask, how's competition been? How
Yep.
many offers do you have in hand? And is there anything that we can do to help our buyer's offer stand out? And then from there, we basically shut up. We let the listing agent speak. And our job there is to grab as much information as we can to
Yep.
understand, is there 4 offers in hand? Because that offer is going to look different than something that has 0 offers in hand.
Yep.
It's the seller's motivation that they are amongst a divorce and they need to get out of this, or are they looking to cash out and create as much equity as they can through this? And so all the information that's very important, because we're going to tweak the offer based
Mhm.
on that. Maybe they say we don't want to close for 3 months. We wouldn't know that information otherwise.
Yeah.
We can put that 3-month close date on the offer.
Yeah, because from the listing side, it's actually a surprise sometimes when you see an offer fly over and it's got a 35-day closing. When you put in the MLS, it said, please close as soon as possible, which to them means whenever the buyer wants. A phone call would have answered that question right away. And certainly some extra information can be put in the MLS, but more cases than not, there's not very clear expectations set in the MLS around what's the exact close date they want, like how fast should we be having our contingency dates kind of wrapped up. Where are we sending the earnest money when we actually get an accepted offer? There's a lot of little things that if you're the agent, that's the easiest to work with, that's built rapport and a line of communication, so that all that the seller has to do when you've sent over a great offer is sign it and it's perfect, as opposed to the barrier of, well, their offer's the best, but we have to go change the earnest money and the deadline dates and the closing date. And they also made a mistake on this. It's not very clean. The agent is going to maybe side towards the person who's professional and written a good contract because they checked all the boxes from the get-go.
Yeah, love it.
Mhm. What else you got on offer writing, or do you feel like that kind of like sums up the things that we need? And again, those key leverage points is like we need to start coming out of the showing with those so we can move in the matter of hours if needed. Typically not the case, but can happen. Anything else we need to know about the offer writing stage?
I think that's good, honestly. Like, I think the most important thing as a new investor too is get comfortable writing offers. The first one is the scariest. It is, as a buyer. I mean, I've gone through it when I bought my first investment property. It's not easy to say yes.
Yeah.
And so I would say, even if you're writing an offer that you know is going to get accepted and it's your first one, going through the process of having the conversation with your agent about the terms, submitting it, that is like an education phase in itself too. Because what you don't want to have happen also is you have an hour and it's a home you love, you're scrambling, hopefully your agent has educated you about what the offer looks like before you get to this point. But then again, like time wise, maybe it just didn't work out where
Mhm.
you met this agent, the perfect listing popped up and you need to pull the trigger on something. So in a situation where time isn't on your side, like if you have time, it's okay to write offers just to get in the flow of writing offers, and also know that not all of them are going to get accepted. And so it
Yeah.
depends on the area you're looking at, how strong you're writing offers. One thing too that we always do, Ty, is if we have an offer that doesn't get accepted, I
Mhm.
call that listing agent. I know you do too. I try to call them within the same day or the next day, so it's fresh in their mind. I understand how many offers did they receive and how do we stack up. And again, the agent doesn't have to disclose how we stacked up. That's up to them and up to if they can say. They also don't tell us what the accepted offer was until that closes. Um, but it gives us an idea of, okay, if we had 4 other offers on there, we stacked up high. So probably number 2, there's 3 more buyers that are still in this buying pool that are after these similar properties, and we stacked up high. That means that if we wrote a similar equivalent offer for the next one, hope there's only 3 more buyers, including us, chances might be in our favor. And so that's also education that I like to relay back to the buyers of how do we miss and how do we do.
Yeah, I always like to call that the feedback loop for my clients. And essentially, we've gotten to this phase that's past education to the shopping mode or the acquisition mode of your journey. And that shopping acquisition mode essentially is a rinse and repeat of find opportunities, run numbers, go on showings, make offers, get feedback. And then you rinse and repeat until you finally get that deal with the accepted offer. And sometimes it takes a few tries, but you will build confidence with it, just like anything else as you repeat it more often.
Yeah, cool. All right. That's all I've got on the offers.
That's all there is. So yeah, obviously next time we're probably going to talk a little bit more about now you've got the property and you're going into your due diligence phase. What happens next? So we'll dive more into what actually happens during a transaction for an investment property here in the state of Wisconsin, specifically in the Milwaukee greater area. So we'll check you guys out next time.
See you guys.